Hello, everyone. Good evening. Welcome back once again to Dr. Rahul Tiwari Financial Academy. You can reach to us through www.trrtfa.com, where you can see who we are and what we do. So, let's again discuss our power strategies once again. So, here is the webinar for our power strategy 3, which is moving average, convergence, divergence, MACD in short. So the MACD, it's a trend following momentum indicator that shows the relationship between two moving averages of prices. The MACD is calculated by subtracting the 26-day exponential moving average from the 12-day exponential moving average. MACD identifies strength, weaknesses, or direction of momentum. MACD basically works very well for the trending markets. So let's see and analyze MACD quantitatively onto our terminal. How does it work? So here I am on Trade Tiger, and for this MACD, I have chosen the TCS as an example. By the way, you can use these indicators and the oscillators on any particular script. They works fine, but just do the paper trading first, and once you get a feel of it, then put your money at stake with the proper risk management, discipline, and the position size. Here I am giving all these examples for the illustration purpose only, so that you can see the power of these indicators and the oscillators if you follow them with a proper discipline only. So let's see. You just right click on the TCS chart, go to the study, click on add study, go to the drop down menu. Here you select the MACD, and then you see by default settings are the small period is 9 and the long period is 24, and the signal line is at 9 period moving average. Simple. But we at TRRTFA, we make some changes onto this and use it for our own purpose. So here we're going to change to exponential. Average period we going to be at 12. We keep the signal line as it is, and for the long type we again change it to exponential, and long period we change it to 26. Hit apply and close. So here on this particular TCS daily chart, we have got this indicator MACD on the panel below. Here we're gonna test it. So let's see. Say, let's, for the illustration, if we have started our trade here where we have a crossover from the short period moving average going below the long period moving average here, where the price is of TCS is 2,640. So let's see, we're gonna put our trade short, entry is 2,640. This is our Excel sheet, system 3 MACD, and the lot size of the TCS is at present at 250. And you need approximately 85,000 rupees of capital to trade with one lot of MACD or MACD examples on TCS. TCS derivative contract, basically the future contract. So here we short here, and then we waited over here, and then we have got the MACD crossover signal here. So here we're gonna exit from our trade something around 2,400 here. So we go to our sheet and exit is 2,400. So our points are this minus our exit, and our profit is profit and loss equal to our points multiplied by the lot size, this. So from here we have got a crossover signal again for long. So we became long here. So we are long here at something around 2,450. And then we remain long. We remain long. Here, you see, the crossover hasn't happened. It's just along some of the parallel lines, the noise. And the crossover actually happens here, clear, where the price is 2326. So we again go back to our position, and here we exit at 2326. Here we have the losses, which is equal to this, minus our entry, which is minus 124. So our profit and losses are is equal to this points multiplied by our lot size. So we have minus 31,000 of loss. And again, here we became long at 2,300. So again, here we became long at 2,350. And we remain long. Here the crossover hasn't happened, and we remain long. And we close our trade. Here the crossover has happened at 2,818. So 2,318. So our profit loss is equal to this minus our entry, minus 32 is equal to this multiplied by our lot size 250 minus 8,000. And here we again become long at 2,410. So became long at 2,410. And then we remain long, and we remain long till 2,530, where the crossover has happened, 2,530. So our points are to our exit minus our entry, and our profit loss is equal to this multiplied by our lot size, which is 250, 30,000. And then here we again become short somewhere around 2,489. So our direction is short 2,489, and we remain short until this crossover has happened here, which is around 2,315. 2,315. Our points are our entry minus our exit, which is 174. So our total profit loss is equal to our lot size into our points, which is this. So, and afterwards, we can also become long from here, and we exit here, and then we become short here and remain short in this trade till now. So let's see our profit and loss with this MACD strategy. So the total profit loss of our 5 trades basically in a year equals to 94,500 rupees. So return on capital would be this divided by our margin blocked, 111%. You see, you are wrong in your 2 trades. In spite of you have generated an ROC of 111%. So that's the power of the MACD. But the only thing that you need to follow is to be on your particular discipline, You have to follow it rigorously with the discipline, with correct order, with your risk management in place, proper stop losses, and your correct position size. Let me give you some more things about the MACD. Basically, MACD, what it does, it measures the strength of the trend and the weakening of any particular trend at support or resistance can help you to identify the turning points. Strong trends at those support and resistance points may indicate a breakthrough or a continuation of that particular trend in that manner. It measures the strength of the trend, and weak trends at support or resistance can help you to identify the turning points from there. So my friends, this is about MACD, and another use of MACD you can also do in terms of the divergences. When the price is going up and the MACD is going down, then you have a divergence, or vice versa. You can get some information about the overbought and the oversold region. And basically, a script is bullish when it's above the zero line and bearish when it's below the zero line. So my friends, please trade this strategy first on the paper trading with proper rules as what we have given to you, and then see the results and follow a proper discipline. Always trade with your stop losses, and I'll meet you soon with our another power strategy in a few minutes of time. And again, I request you to please ask me any question what you have during the live session. If you don't understand anything, you just feel free to put me any question. Okay, till now, have a goodbye and have a good night. See you soon. Thank you very much. Bye bye.